Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap, episode number 2. This is the second episode in this series, which hopefully goes on for a very long time because I enjoy covering the markets. And based on the feedback I got yesterday from everybody on episode number 1, you guys thought it was a good idea. I think about 95% of the comments pretty much said that they're able to listen to this when they don't get a chance to watch the market open and market close. It's a simple way for them to digest what's happening in the world. And a lot of you apparently read the daily recap on Twitter anyway. So having a video, audio version of listening to that is helpful in addition to reading the news on Twitter as well. So I'm really happy that people are happy with this. This is kind of the direction I've been thinking about for a while. Finally put it into action. Looks like you guys enjoy something that recaps the market, hopefully in 15 minutes. I got the timer on right here, so we're going to try to make sure it's 15 minutes and I don't talk forever. Like it's not a live stream where I can't talk for 5 hours. But I do think it'll be helpful every single day. We'll try to segment it in the right way. Probably not have 12 different segments, maybe like 7 to 8 of the most important things that are happening every day. And it'll be in the chapters, and you guys will be able to listen to it and hopefully get value of it every single day, Monday through Thursday, hopefully for the rest of my life. Let's get into episode number 2 of the Daily Recap. All right, so first thing we're going to start off and talk about is obviously these tariffs. They have been quite the story today. Escalating trade tensions have gone pretty dramatic. The United States last night at 12 a.m. said they're going to do 20% tariffs on China, 25% on Canada, 25% on Mexico. Well, Mexico retaliated today and they said, hey, we're going to be coming out with something soon to do about 15 to 20% tariffs against the United States. China already said, all right, if you want to play this game, we're going to play this game again. Kind of feels like deja vu 2018. They are now tariffing 15% of U.S. agricultural products, and soybeans is one of the biggest products that they're going to be putting a tariff on. That was not the best thing when it happened in 2018. Trump kind of had to bail out the farmers. Apparently, it seems like that's going to be happening again. Canadian Prime Minister Justin Trudeau came out today and he said to my fellow Canadians, I'm not going to sugarcoat this, but this will be tough for you. And he basically said we're going to have a 25% export tax on a variety of different things, $30 billion of imports from the United States, and an additional 25% on $125 billion of imports from the United States will be happening over the next 21 days. So in the next 5 days, there will be a 25% tariffs on 30 billion of imports. And over the next 21 days, a additional 25% on another 125 billion of imports. Also, Ontario today announced that they're going to be tariffing electricity. And I didn't know this. Some of you guys probably knew this, but Ontario provides electricity to 1.5 million homes in Michigan, Minnesota, and New York. I blamed Ontario today for the electricity of my Wi-Fi on the live stream in the morning because it was being stupid. It's probably not Ontario's fault, but it's easy to blame the Canadians. So, yeah, the Canadians, even if they're easy to blame, they are not backing down this easily. And it looks like there's going to be a full-on trade war, but there's always a but. I like big ones, and I cannot lie. U.S. Commerce Secretary Howard Lutnick, in a Fox Business interview at 5 p.m. today, suggested that President Trump might negotiate a tariff compromise with Canada and Mexico by tomorrow, expecting an announcement that could ease some of the tariffs that they imposed on them if issues like illegal immigration are addressed, which is essentially leaving the market to just be in this state of what's the word? The word I'm looking for. Oh my God, I need to think of the word. I'm going to leave this in. I'm not going to edit this out. What? Unless this takes forever. I only have 15 minutes. What's the freaking word? Hold on. I'm going to think about it. The word is purgatory. That's the word that I was thinking about. So if you're stuck in a state of purgatory, which you just don't know what's going to happen, it's like one day we think there's going to be plenty of tariffs. The S&P draws down $850 billion of value. And then in an interview with the Commerce Secretary, he says, actually, no, we're probably going to resolve the tariffs pretty soon. There's going to be a deal. And then it's like, well, should the market even be reacting to the initial drawdown from tariffs if the tariffs aren't going to go in place? I don't think anyone knows. This video will be coming out before Trump addresses a joint session of Congress, which I'll be covering live tonight. I'll be giving the updates on that tomorrow in the market open. Maybe he says something about tariffs. Maybe he doesn't. But at this point, no one knows what's happening. The tariffs are going back and forth. China, United States, Mexico, and Canada. Maybe they're going to actually be implemented. Maybe not. I guess we'll find out in the coming weeks, but obviously that created a ton of volatility. The S&P 500 down about 1.5% on the day. Okay, our second topic, Palantir. They actually announced a deal today. And I'm saying actually not because they're not getting deals, but because they're not announcing as many deals anymore. Press releases from Palantir have been maybe 1 or 2 for the majority of the year. And I think it's really because Palantir is working more than showing off how much they're working for. They're just becoming more of a mature company that doesn't need to literally highlight every single deal that they're getting. But today was actually a pretty good one. Société Générale, a leading European bank based in France, 1.6 trillion of assets, secured a deal. with Palantir to enhance its international retail banking operations against financial crime. This is what the Palantir head of France said. With financial crime becoming ever more sophisticated, advanced data analytics and integration have become ever more crucial to effectively combating it. We are proud to be part of this critical challenge for one of Europe's most important financial institutions. And obviously, the collaboration strengthens security and data integrity for Societe Generale. It also continues to expand Palantir's international commercial business. I really like this. We haven't gotten an international comms deal in a while. International commercial is one of the lowest growing parts of Palantir's business. US commercial is great. US defense is great. We need to expand internationally. By the way, Europe did announce a 150 billion euro plan to rearm Europe. So you had your European defense contractors and their stocks start to do very well. A lot of them are up almost 40, 50% year to date. They were up today again based on that news. I think some of that money can be going to Palantir if a France and a Germany wakes up and says, hey, if we're going to be spending almost 5% of our GDP on defense, we should be getting the right software, not just guns and ammunition, but the actual software to manage all that stuff. So hopefully Palantir can get some of those deals. But in terms of another international commercial customer, one of the biggest banks in the world, yeah, that's a hell of a deal. I'm happy we got that deal, and hopefully we continue to get more deals like that. Even if Palantir doesn't announce them publicly, it does seem like the commercial business internationally and domestically is starting to grow in a meaningful way. All right, our third update, Tesla. Today, Tesla supported a surge in China, registering 12,400 new vehicles last week, nearly double the previous week's numbers, driven by the launch of the refreshed Model Y Juniper, with 6,000 deliveries in its first week. Now, although that's good, Tesla only sold 30,688 China-made vehicles in February, marking a 49.2% year-over-year decline and a 51.5% drop from January, according to CPCA data. So although it's good that the Model Y is starting to ramp up in production and in deliveries, and China insurance for Tesla registered 12,400 vehicles, there's still a pretty meaningful decline year over year in terms of how many actual cars Tesla is delivering in China. Now, one of the other things that's bullish and bearish, it's bullish for the consumer, bearish for what I would say is the overall trajectory of the company in Q1, if you're looking at it from an investing perspective. They have officially unveiled, again, 0% APR for Model 3s. I bought my Model Y last November because of 0% for a Model Y. I really hope they bring that back because I want my dad to get a Tesla, and it would be awesome to get 0% APR to finance that Tesla. But they brought it back for Model 3. Now, that's great for consumers because obviously consumers get to like finance their Tesla for free for 60 months. But it also probably signals that Q1 delivery numbers are not that good, volumes are not that high, and they're trying to incentivize people in any way, given the Fed's not cutting rates, to cut rates themselves by giving you a 0% APR. I like it for consumers, and I hope it comes back to the Model Y. But for the business, Q4 numbers were not good. They're growing negative 9% year over year. They have a massive multiple. I am very bullish Tesla long term. I bought some at 288. I do think that Tesla will be a behemoth one day. It's just in the short term. If Q1 numbers suck and 0% APR is kind of telling everybody that, yeah, they're probably going to suck if they're trying to incentivize you with these deals, that might not be the best for Tesla in the short term. But regardless, if you're a consumer and you want to get a Tesla, I mean, you now at least have a better financing opportunity to buy a Tesla. All right, our fourth update has to do with Google. So Google today urged the Trump administration's Department of Justice to reconsider its push to dismantle the company. Now, if you didn't know, the DOJ has been investigating Google for about a couple years now, and it really got serious back in September of 2024 when a lot of people thought that Google would start to get broken up. Android, YouTube, Chrome, etc. Trump doesn't really want to do that. He's more pro-business. He obviously wants AI to be at the heart of what all these companies are doing and for them to be leaders in artificial intelligence. One of the easiest ways to not be a leader is to break up the company so that the symbiotic, synergistic relationship that Google has with YouTube and search and Android and Chrome, if all of that's broken up, I mean, it's probably just not going to be the best for their AI ambition. First of all, Google's trading at an incredibly cheap multiple, 18 times, or at this point, 16 times fiscal year 2026 earnings. I think there are some questions about search and LLMs commoditizing search. Those questions have been around for a long time, but Google continues to get massive momentum in search. They actually just put out a stat that I want to read for you guys real quick on how much search volumes they've done over the past inception, right? Since 2004 when they became a public company. And it's kind of insane. So it actually goes back to 1999. 1999, 1 billion searches annually. 2000, 14 billion. 2001 to 2003, they averaged 55 billion. 2004 to 2008, they averaged 73 billion per year. 2009, 365 billion. From 2012 to 2015, they averaged 1.2 trillion searches a year. 2016 to 2024, 2 trillion searches a year. 2025, they are on pace for 5 trillion searches a year. It just goes to show, hey, there's a lot of momentum with Google search, even if that momentum is going to be hurt a bit by the Grok 3s and the GPTs of the world. Now, Trump wants these companies to survive. He wants them to be the best. I am pretty confident that the Trump administration and their DOJ is going to let Google just be Google and do their thing, because they probably don't want to shake it up and mess with what's going on right now, especially in this sort of volatile time with Mac 7 companies and with China, Alibaba, DeepSeek starting to get really good innovations that are making people question the broader AI CapEx cycle. You don't want to break Google up and then those companies get an edge. And the reason they got an edge is because the United States was trying to be antitrust with the biggest tech companies in the world that probably do more good than harm and don't need to be broken up. So yeah, it seems like Google's not going to get broken up based on what's going on with the DOJ, but we're obviously going to find out over the coming months. One more quick question or quick statement on Google. Uber and Waymo, which Google owns a majority stake of, launched autonomous rides in Austin. So Tesla's coming to Austin in June. Waymo and Uber are already there. The service covers a 37 square mile area, including downtown, Hyde Park, and Montopolis. It also excludes highways, with Uber's partner Avmo handling fleet operations and Waymo managing testing and support. This is going to be an important partnership. Uber wanted to partner with Tesla. Dara asked Elon a couple months ago. He revealed at a keynote the other day that Elon said no, they're going to go by themselves. They're going to build their own app. They're going to have their own network effects. They're not going to utilize Uber's 170 million monthly active users. And so Uber's going with Google, and Uber and Waymo are going to go head to head with Tesla starting in June, even though Waymo's starting a couple months early. And we're going to see how this all plays out. Next quick update. The IRS is reportedly developing plans to reduce up to half its 90,000 employee workforce, according to the Associated Press. That means the IRS would have 45,000 employees. I just got an email from my CPA today telling me how many dollars I owe in taxes. It is a number that I have never seen before. It is the most amount of taxes I will be paying in my entire life. You know, quite frankly, I'm happy to pay it because I'm happy to give back to America, because America has given me everything that I have in life. But it's a big number, and I've never paid these many taxes. So yeah, I will be paying those taxes. Now, granted, if the IRS only has 45,000 people, I guess they're going to have to be working overtime to make sure that everyone's paying their taxes. But this is in a line with what Doge is doing, which is trying to make the government a lot more efficient and downsize the government. This might have implications on the labor market. If we start to see more unemployment, we saw the Consumer Protection Financial Bureau is going to be getting rid of all their employees, about 1,700. That agency might not even exist in the next couple months. So I would not be surprised over the next coming months if we see a dramatic decline in government jobs, which ends up hurting unemployment. We are going to get non-farm payroll numbers on Friday, which is going to be really important. Goldman Sachs is estimating we add 150,000 jobs. Hopefully we do. If we add less than 100,000, I think the Fed's going to start freaking out about a recession, because if the labor market cracks, we've got some issues. But if we add about 120 to 130,000, a little bit lower than expected, I think that's okay. Now, if we add more than 150,000, the Fed's probably going to freak out about inflation. So this is why the macro is so interesting, because we have all this nuance. But if we get to around 150,000, I think that's okay. The next labor market report starting in April, if we do start downsizing the government, is going to include a lot more people that are unemployed if the government is laying off all these people. The SEC announced yesterday they're giving $50,000 per employee to voluntarily resign, basically a $50,000 severance package to leave. Obviously, it seems like the government is downsizing. They're starting to get rid of employees that they don't need at the behest of Doge. President Trump did sign an executive order a couple of weeks ago saying that every government agency, whether you're the IRS or the FDA, will have a Doge liaison, and you will have to report to Elon Musk. So this might have implications on unemployment. It might have implications on the efficiencies and the technicalities and logistics of how the government operates. But we are going to see what the impact is of government agencies in the United States starting to downsize. Next update is on Robinhood. Robinhood CEO Vlad Tenev made 3 major announcements today at the Citizens JMP conference, and boy, were they exciting. So on futures, Robinhood CEO Vlad Tenev said, "We just finished launching futures to 100% of our customers, and it's been growing incredibly well. It's at a faster ramp than index options and exceeding our expectations. Before launching it, we thought it would be a 9-figure business, and what we are seeing is giving us a lot of confidence." Index options is already on a $15 million annualized run rate. Vlad saying that futures is launching or futures is ramping up better than index options is exciting, because that means it's probably higher than a $15 million annualized run rate. And that probably has more expansion opportunities to grow, become a $100 million revenue business. So it seems very exciting that this momentum is continuing. On the Robinhood Weekly yesterday, me, Roy, and Tanner actually were debating if futures were going to be used on Robinhood. And Vlad's kind of confirming that now that it's out to 100% of their customers, the early traction they're seeing is very good. Second, he revealed that we now have 3.1 million gold subscribers. At the end of Q4, they had 2.6 million. It's been 2 months since Q4. They added 500,000, 3.1 minus 2.6 million subscribers. So those 500,000 divided by 2 months 250,000. They added 250,000 a month. Last year, they were barely adding 50,000 a month. Massive increase. 3.1 million paying gold subscribers. The beautiful thing about a gold subscriber is once they join, they deposit more, they trade more, they sign up for things like the credit card. They just increase their assets under custody. They take out margin. There's so many benefits to getting people to be in that gold ecosystem. And that's what Robinhood is currently doing right now. Final thing they said is that in the first 2 months of Q1, they have now hit 10 billion in net deposits. The first 2 months of Q1 for 2024, they were averaging about $2.5 to $3 billion a month in deposits, which was insane at the time that they were doing $3 billion a month. It's really hard to get net deposits coming into the platform. In Q1 2025, they're averaging 5 billion a month, which is incredible. If they can grow that to 7, 8, 9, 10 billion over the coming years per month, Robinhood's going to be adding hundreds of billions in net deposits, which will eventually become assets on the platform. In my opinion, this is a company that will have $1 trillion in assets. Right now, they're barely at 200 billion, and then many, many more trillions after that. But their growth is incredible. Vlad really showed some interesting stats today in terms of how their growth is operating for Q1. And also, he said their institutional revenue, they are getting really excited about. They offer a lot of services to retail, but they've done a lot of internal operations that they realized they can offer to financial institutions. And he hinted at the conference that this is a big revenue opportunity for us. We think it can be bigger than our retail revenue opportunity. And over the coming years, that's what they're going to explore. So Robinhood, I bought the dip today. I bought more shares, bought more options. I continue to believe that this company will be one of the biggest financial institutions on the planet. All right, this is probably already above 20 minutes. I'm sorry, trying to get this to 15 minutes. I'm going to try my best in the future, but your boy can't stop yapping. So the last point will have multiple little subpoints, and we'll get through them very quickly. Number one, Crowdstrike earnings. Crowdstrike is down after hours. How much are they down? They are down 9.2%. Okay, so they're getting hit. They beat on revenue. They beat on EPS. They're growing 31% year over year. The part where they missed is the fiscal year 2026 guide. The street thought they would do 443 in EPS. They're guiding for 333 to 345. So that's about $1 miss on EPS. That's why the street's upset. Maybe this rebounds after the street realizes that this is a stupid reason to be upset, but maybe it's not a stupid reason to be upset. Nonetheless, Crowdstrike, one of the most incredible cybersecurity companies, does trade at a premium. 700 price to earnings. And the reason it trades at that premium, obviously, is because people are willing to pay a premium for really good SaaS revenue that's reoccurring and that's in the cybersecurity space. AI is a tailwind for cybersecurity benefits. But if you're going to miss by $1 on your fiscal year guide for EPS, yeah, the street's definitely going to be upset about that. So that's what we had for Crowdstrike. Grab made an acquisition yesterday that I didn't get to cover, but they acquired a company called Everrise. It's a 19-store premium supermarket chain in Malaysia. They bought it from Navis Capital Partners, which is a private equity firm. Now, look, I'm very bullish on Grab. I've got a very big position in Grab in options and equity. I believe that the stock is being held down from that $5.56 range, which is where I think sort of fair value is, especially after their Q4 earnings. Primarily because of the macro, primarily because of algorithms. I mean, this thing, every time it tries to break above $5, you can just tell S&P takes a dip, NVIDIA takes a dip, the algorithms take everything down. I personally believe towards the end of the year, I personally believe by 2027, we are at $10, and by the end of the year, we're closer to $7. So I think this one is just coiling up. They obviously sandbagged on their Q4 earnings, if you kind of looked at their numbers and their philosophy of how they beat and raise. So I think they are going to have some pretty good numbers by the end of the year. Now, the company still has 30% of their market cap in cash, about $6 billion. I don't know how much this deal costed them. Probably less than 100 million, in my opinion, maybe $200 million. The important thing is they're not buying back their stock. And the reason I think they're not buying back their stock is because there's a bigger company called GoTo, which is their Indonesian competitor. They have 30 million users. GoTo is a public company that can't turn a profit. Their margins are getting destroyed because they're having to compete with Grab. Grab's margins are not really getting destroyed because they're a much bigger company, so they can compete with GoTo. But they want to take out GoTo. And the way to take them out is to buy them out. And I think that buyout will happen. I'm kind of 60-40 on it. 60%, I think there's a chance. 40%, there's not a chance. Rumors have already been out there. There's a world in which it obviously doesn't happen. Then I think Grab goes a different direction. But the reason I don't think they're buying back more of their stock, they only bought back 10 million shares last quarter, is because they need the cash to be able to buy out GoTo. And if they buy out GoTo, their margins are going to explode because they're not going to have to compete as aggressively as they've been competing already. So a name that I continue to be bullish on, I think it doubles in the next 2 years, which would be an incredible return. The options I'm in can create leverage against that doubling into more of a 7x if it happens. I bought the majority of my position around 450 to 460. So the options have still been green even after Q4 earnings with all the volatility. But I think we're creating a nice base, and hopefully we can get to that $10 price target by 2027. Final update for today. China announced their 2025 economic targets. They're aiming for approximately 5% GDP growth and 2% inflation. The plan also focuses on stabilizing real estate and stock markets while targeting 700 million metric tons of grain output, signaling a strategy to balance growth and stability that could influence global investor sentiment and commodity markets. One of the things about this tariff war with China and the United States is that China's economy is garbage. And the only reason they're getting investors to come back in is because A, they're stimulating, B, Xi Jinping is finally talking about capitalism in a more positive way. He's been shitting on capitalism for the past couple of years, and he's been more preaching communism. Obviously, that hasn't worked, and the economy has fallen apart. And so he's saying, no, I love capitalism. I'm shaking hands with Jack Ma, which is one of the biggest capitalists in China, the founder of Alibaba, in order to get investors to realize, hey, China's friendly to investors. I think in the negotiating with tariffs, the United States does have an upper hand in terms of leverage. Now, will that be used correctly? We're going to see how it plays out. But China can't afford for us to be tariffing that much, or for them to be retaliating, because it's just going to be a nothing burger for their economy. It's going to hurt the United States, but it's really going to hurt China given where their economy is right now. So I would imagine we get a deal done. If they grow GDP at 5% with 2% inflation, that would be amazing. And if they can get a deal done with the United States, that's a win-win for all. That would also be amazing. The question is going to be, when does it happen? How does it happen? How does Trump make it happen? And ultimately, will these tariffs go into effect, or will they just be used as a bargaining chip like they were back in 2020 to get them to sign a deal? All right, that's it for me. Hopefully this wasn't too long. We are going to try to keep the show at 15 minutes. If it ends up being 20 minutes every day, then I'm sorry. It's going to have to end up being 20 minutes a day. But hopefully the information is very valuable, and you guys continue to enjoy the content every single day. Daily recap number 2. I think we're going to call it daily recap. Very simple name. We'll keep it going Monday through Thursday. Thank you, everybody, for joining. Really appreciate you guys enjoying the content, enjoying the new format, and we'll keep going every single day. Bye, everyone. Have a good one.